What's going on, YouTube? Aaron Trevino here, back with another wonderful guest from beautiful Austin, Texas. We are joined by Brandon Daniels. How's it going, Brandon?
Yeah, it's going great. Yeah, how about you? How's your day been?
It's been good. It's been good. Just one step at a time, like anything else. And I know this convo has been in the works for a little bit, so I'm real excited, and we're happy to have you on the show.
Yeah, no, thanks for having me. I know when you reached out, I was excited. I've been able to see some of the other shows you've done in the past, so it was an honor to get invited on. I appreciate it.
Okay, beautiful, Brandon. Absolutely. So for those of us who aren't too familiar with you, would you introduce yourself, please?
Yeah, so my name is Brandon Daniels. I'm a mortgage broker in Austin, Texas. I work for First Quest Mortgage, which is a family company. It's my dad is the broker, and then I work with both of my brothers, Bill and Blake. It's a privilege to get to work with them, and we do deals really throughout Texas. I also have my Colorado license as well, but I would say the majority of deals we have are in Austin, but really we work on stuff anywhere. So, and
Okay.
yeah, so.
Yeah, no, absolutely. I'm always curious. I think the family business model is so neat, and seeing a big family do something like that, it's always cool to see.
Yeah, it's a lot of fun. I get to talk, with my brothers kind of every day and my dad. And before that, I was in commercial real estate, and which I really enjoyed. But it's been, I started about a year ago with and switched over to First Quest. So it's been a great experience so far for sure.
Okay, absolutely. Now, I'm curious about the holidays. When it's Thanksgiving or Christmas, are you guys able to decompress, or does someone have to talk about business?
No, I mean, it's something that we all enjoy, and so naturally those conversations come up, and so we'll be talking about, where do we think rates are headed, or what do we think about the housing market, and so I think it's something that it's kind of a shared common bond that we all have. But when we're not talking about mortgages, I graduated from the University of Texas, and same with my dad and my middle brother. So if we're not talking about mortgages, we're usually talking about Texas football. So
Absolutely. I love talking to a fellow Longhorn, and hoping for a good season this year, right?
yeah, absolutely. Yeah, we'll see. I know we just finished spring game and heading in the summer, and so I'm hoping SAR can get it turned around and have some good football.
Yeah, that's right. And it's great that Houston's not too far, so I'll definitely be coming in for a few games.
Awesome.
And
Yeah.
I guess maybe for someone who hasn't been to the city of Austin, out of anywhere in Texas, why do you call Austin home? What makes Austin unique?
Yeah, no, great question. So I was born in Houston, and then when I was four, my parents moved us out to Dripping Springs, and so I've really lived in the Austin area my whole life. And so just seeing the changes that have happened from, I guess, we moved here in 1998 to now, and it just how the city's grown. But I mean, just personally, what I love about Austin is how close it is to so many fun kind of outdoor activities, whether that's, floating the river, going out to the hill country, hanging out at Zilker. There's just so many fun places to go out and spend your time. And, just calling Austin my home for so long, it's just kind of a part of, who I am now. And I briefly, actually, after I graduated, my first job was up in Dallas. And I really enjoyed that experience, and it was fun to be in a different city. But I met my wife there, and then she also went to UT, but we had met in Dallas. And whenever we were talking about where we wanted to live, we were both like, we want to live in Austin. We got to get back there as soon as we can. So definitely love the city, and it's a great place to be for sure.
Yeah, no, absolutely. It's funny, you've kind of come full circle. Born in Houston, spent some time in Austin, a bit in Dallas, but something always brings you back, right?
Yeah, no, absolutely.
Yeah, no, that's awesome. I can really vouch for that as well. I mean, Central Texas is great. Like you said, you've got the river and the hill country, and there's so much action, for everyone. There's always stuff going on.
Yeah. And how about Houston? What are some of your favorite parts about being out in Houston now?
Yeah, that's a great question. I mean, I've always liked Houston. I guess kind of the cosmopolitan vibe, right? It's a large city, bustling city. At least for me, I can really feel the energy here. I like, I guess, the mentality of the people as well. People are, wanting to build, and they're industrious, wanting to get stuff done, pretty accommodating and friendly. So I've really enjoyed my time here, the short time I've been here.
Yeah, that's awesome. Great.
Yeah, yeah. And I mean, I'm very biased as a proud Texan. I'll always vouch for Texas, but it's cool seeing different little parts of the state have its own little personality, right?
Yeah, no, for sure. Absolutely.
Yeah, definitely. No, and I'm curious. I know that you mentioned, your family business is the mortgage stuff. Maybe someone who's never gotten a mortgage, or even is just knowing where to start. Maybe they have some cash. They're looking to buy their first home, do their first investment deal. Where do you even start?
Yeah, no, that's a great question. I know for most people who aren't in real estate, whenever, first time think about a mortgage is when they're starting to buy homes. So there's really some important things to do beforehand before you start looking that is really going to set you up for success. And so the number one thing I tell people, first thing you do is get pre-qualified. What that's going to do is, help you understand what's your price range. It's hard to know, like, if there's a, $500,000 house, like, do I qualify? Do not qualify? And what you don't want to do is to get under contract and, maybe you don't have the income, or maybe there's some issues with debts. And the last thing you want to do is have something come up in underwriting that prevents you from getting the house. And so that's step one. And so you can set a price range. And then also when you get pre-qualified, what we'll do is we'll write you a pre-qualification letter. And you can give that to the sellers whenever you submit an offer, and that lets them know that you've been, thoroughly vetted by a lender, that they know that you can get the financing that you say that you're going to get, and that's going to be, a huge step up in your offer. And I mean, today it's so competitive that a lot of times realtors will require that to be part of your offer in order to be considered. So definitely suggest that. And then, like I said, it's just makes the closing process so much smoother to know upfront that you're set up for financing. So that would be the first thing I'd recommend. And then after that, just kind of walking through the loan process, shopping with your realtor and finding a house. The next step is getting under contract, which in today's market can be quite challenging. So it's huge to have a realtor that is experienced in the market. They know how to structure an offer. And so, once y'all do get under contract, what we do is we'll submit that to the lender. We'll first, and sorry, I'll take a quick step back, but as a mortgage broker, part of what we do is we shop your loan across a bunch of different lenders. And so we have, depending on what type of loan it is, we have different lenders that are really competitive in certain areas. For example, we have Home Point and United Wholesale. They are great for conventional loans, for ARMs. They really specialize in really a whole bunch of different loan products, but definitely down the middle of the fairway, those are going to be the lenders that are going to have their best pricing. And then if you're needing a construction loan, FHA, VA, whatever it might be, we have access to different lenders, which is going to be huge in finding you the lowest rate. And so kind of going back into the loan process. So once you get under contract, we'll shop all our different lenders and find you at, the best rate, the best terms, and we'll present you with all your options. And that way you can, select whatever the option kind of is right for you. And then once we submit that to the lender, then we'll look at locking your interest rate. And especially today, it's a rising interest rate environment. One of the things you want to avoid is having your interest rate be floating, and then all of a sudden at the beginning you can qualify, but a couple of weeks later the interest rate's gone up, and all of a sudden you can't qualify anymore because of that interest rate. And so by locking in, exactly what you're going to get, and provides you that kind of security as you're going through the closing process. So we'll do that. And then once we lock your rate, you'll get what's called your initial loan estimate. And what that's going to do is going to break out, well, one is going to show you your rate, but also show you all your estimated fees. And so up front, here's ballpark how much I'm going to need for my closing costs, for my down payment. And it really clearly lays out everything. So you understand what are the costs associated with this loan. And then we'll just gather the rest. If there's any documents we hadn't gathered yet, we'll gather those, we'll submit them to the lender. And then it goes through what's called underwriting. So the main thing, what an underwriter's looking at whenever they're reviewing the loan, are three things. One, they're looking at your debt to income ratio. And so they're comparing Depending on the loan product, it's usually between 43 to 50%, whatever your max debt to income ratio is. And so they're just making sure that that you don't have too many debts in relation to your income. They're factoring in that mortgage payment, that new mortgage payment is included in that as well. They're also looking at your assets. They're wanting to make sure that you have the funds in your bank account to actually, cover the down payment, cover the closing costs. So they're reviewing those. One thing, just a tip to watch out for is in those months leading up, they're looking out for any large deposits, and they're going to want you to explain, what was this $20,000 deposit you had in your bank account? It's not your income, it's not this. And so sometimes we'll have to verify where those funds are coming from. That's another reason why it's great to get pre-qualified before. That way we already know the answers up front rather than something happening, during underwriting that, we weren't aware of. And then the third thing that they're looking for is just your credit history. So when we pull the credit report, they'll see, one, what are your debts? But two, do you have any 30-day lates, 60-day lates, any foreclosures, repos, anything like that? And so they want to make sure that you have a strong history of paying your debts. And we do have options for people who maybe have some recent negative credit histories. And so there's options for that. But that's one thing that they're going to be looking at. And so as they're reviewing all those documents, one of the things that you're doing as a buyer is you're shopping for your insurance. And this actually had funny enough, just a couple of days ago with Aaron, we were looking at a house, and I went to an insurance provider that I've used for, a ton of, different policies in the past, and got a quote for it. And it was around $2,000. And I said, contacted Aaron and said, hey, would you mind shopping this around for me? And Aaron, being an insurance broker, he was able to shop hundreds of different insurance providers and was able to get me a premium that was $500 lower than what I'd got from my other insurance provider. So that's one of the huge benefits of having a broker who can shop around and find you, really the lowest, not only the lowest rate or premium, but also a product or a policy that's going to fit your needs. And so just a little shout out to Aaron, that's, where having experts on your side, having that value being added can be huge. So thank you for that.
Yeah, of course, Brandon. No, and I greatly appreciate the kind words from you. Definitely, trying to do what I can. Obviously, like you said, getting the right coverage that fits for you, right?
Mm-hmm. Yeah, definitely. So after you go through the underwriting process, the underwriters are going to come back with what's called a conditional approval. And what that's going to include is any last remaining items that they need in order to close the loan. And so typically with our initial submission, we kind of knock out all the main items that we can up front, but there's usually a couple things that you can't actually provide until later on in the closing process, whether that's your title documents, maybe you're needing a new survey, could be the appraisal. There's usually a few items that you get late in the process. And so it really is just as simple as checking those off as they come in and making sure they have the right information in there. And then after you finish all of those, you'll get your initial closing disclosure. And so this document is going to look almost exactly the same as your initial loan estimate you got that says your rate. It says all of your estimated costs, but by this time we've been able to hone in on it it's not the final copy, but it's basically one of the final drafts of what your final costs are going to be. And so you'll know towards the end, this is really about what I'm going to have to put down. This is what rate's going to be, things like that. And then one thing that's important to be aware of is legally, after you receive and you sign your initial closing disclosure, you can't close until 3 days after. And so sometimes, especially when you're rushing at the end to close a deal before your lock expires or before the contract ends, it's important to get that initial CD signed and taken care of as early as possible. That way, you're not waiting at the end for that to come in, and you're waiting for that 3-day cool period off to end. So that's your initial closing disclosure. And then at that point, once you sign that, you'll get your clear to close. And all that means is that you're done, you're at the finish line, and you get a scheduled closing. And so that's really what the whole process looks like. For those first-time home buyers who, that they haven't experienced that before. Usually closing, depending on, we have stuff that closes in as little as, 21 days. We can probably shave that down to maybe 18 if you do like a rush on appraisal. But I would say I would plan for usually 30 days to close, or if it's a unique file, maybe it can drag on as long as 37 to 45 days. But I would say, generally speaking, I would expect about 30 days to go through that closing process.
Yeah, no, absolutely. And, thank you, Brandon, for running through, I guess that timeline of, how long things will take, and really just a step-by-step. And you mentioned it as well, but just, can you kind of describe maybe a few of the struggles or maybe hangups that a first-time home buyer could have when trying to get a loan for the first time?
Yeah, absolutely. So we talked about it a little before, but step one is getting, pre-qualified and making sure there's no potential issues with, say, your income. One example being, say you just changed jobs and you're ready to, but you're also buying a house at the same time, but your new job is self-employment income. Well, the guidelines, at least for a conventional loan, is that you need to be self-employed for at least 2 years in order to use that. And so it's huge to talk to a mortgage professional beforehand to know, hey, is changing jobs right now really the best thing for me to do? Should I wait until like later on, maybe after the loan's closed? How should I approach that? Another thing is taking on new debt. Let's just say you're under contract and you're going through the loan process, and you decide, hey, I found this car, I want to buy it, and you get a new car loan. Well, usually at the end of the loan process, they'll do another credit pool. And if they see that you've taken on more debt, that could create an issue with your loan file. So that's another thing you want to avoid is not taking out any new debt. And then, I would say really most things can really get cleared up just having all your ducks in order beforehand. And so that's the biggest thing I would recommend. But yeah, first time home buyers, that's just knowing the do's and don'ts. And unfortunately, there are a lot of them. And so it's good to check before you make any decisions, big financial decisions during the closing process.
Sure, absolutely. And, I guess for someone doing it for the first time, it can seem like a daunting task. Even if you're armed with the information, it's, it can be tough to even know where to start.
Yeah, definitely. One of the things that we try to do that one of our goals as a mortgage broker is we want to make sure that our clients are educated through the whole process. And so one of the systems that we have in place is as you reach each milestone, you get a video that explains, you've now reached the underwriting stage. Here are the things to look out for. And it's, these really easy videos that kind of educate the borrower as they go through the process. And so definitely huge because it's easy to feel lost. And I know sometimes using other routes to get a loan, say going through a bank or going through, other routes, sometimes that communication isn't always there. And so that's one of the huge benefits using a broker can have.
Yeah, absolutely. No, that's definitely a nice benefit of using the broker, right? Because they're able to shop you different deals, and like you said, really placing an emphasis on the communication, because at the end of the day, it's key, right?
Yeah, definitely.
Yeah, absolutely. And I'm curious as well. You did a great job explaining the timeline, different nuances, struggles that people may have. Could you also describe, maybe I'm a first-time home buyer, newly married or something like that. What kind of loans could I get?
Yeah, absolutely. So I would say the best one out there that I would recommend if you can qualify for it is a 3% down conventional loan. If a down payment, if you're low on a down payment, that's what I would recommend. It's something that's unique for first-time home buyers. If you're not a first-time home buyer, and really how they define that is you haven't owned a home in the past 3 years. So if that's you and you are wanting to put down as little as possible, that option is out there for you to take advantage of. And one of the huge benefits is you're getting a conventional loan, which is going to have great rates. It's going to have flexibility for your PMI. And what that means is private mortgage insurance. And so whenever you have a loan to value or LTV that's higher than 80%, the lender is typically going to require you to have mortgage insurance. And so one of the benefits of a conventional loan is and it can be through a variety of things. Say you've made improvements to the home and the value has gone up. Say through appreciation over time, the value goes up, or say just through paying down your loan, which is lowering your loan value. Any of those things which gets your loan to value below 80%, once that happens, you can remove your private mortgage insurance, which can be expensive. And so having that flexibility where 2-3 years down the road that goes away is huge, which is not the case for all loans. A loan that also might be beneficial to first-time home buyers and FHA loan. Now, the reason why I typically steer people to conventional loan is for those benefits. But one of the things that, say you're first-time home buyer, but you have, maybe some negative credit events that have recently happened in the past year or two, or say your debt to income ratio is really a lot higher than what you could get done with a conventional loan. That FHA has the flexibility to, one, give you a loan down payment of 3.5%. It can allow you to go higher on your debt to income ratio. But one of the drawbacks is that mortgage insurance never goes away, even if your loan to value gets below 80%. And so there's nuances with each loan product, but each one really fits a need, whether, it's poor credit or high debt, there's options out there for you. But other ones that I would say these can be first-time home buyers, but it's not necessarily focused towards first-time home buyers are so first is USDA loan. So that this loan product is targeted for people buying in rural areas. One of the huge benefits to that is you can put 0% down, which is a great perk. You also get great low rates. Now, there are some upfront fees that you have to pay. It's funding fees at the beginning, but that can be a great loan. There are some nuances. One, you actually have to go through the underwriting process twice. You do it first with your lender that you're closing with, and then you also do it through the USDA agency. And so that can lead to longer close time. So that's one of the drawbacks for a USDA loan. You also have your VA loan, and what that's targeted for is for veterans. And a huge perk to that, just like the USDA loan, is you can put 0% down. You also have great rates. There's little to no PMI, and it goes away once you get below that 80% loan to value. So those are just some of the different loan products that, for first-time home buyers or people, really for any buyers, that they can take advantage of. And I'd say the last kind of common product that we'll see that I'd mention, and especially in today's market, we'll see them quite frequently, is a jumbo loan. And so what that is a loan that's above what's called the conventional or conforming limit, which today is $647,000 roughly for loan amount. So any loan amounts that are higher than that, you can't do a conventional loan and you have to do a jumbo. One of the trade-offs is that you typically have a little higher rate than a conventional loan, but in underwriting can be more strict. But generally speaking, those can be great products too. Obviously, if you're buying a more expensive house. So sorry, that was a lot of information, but there really are, whatever your needs are, there's lots of programs that can fit those. So
Yeah, no, absolutely. That was a great ride up there. And it's funny, I was just talking to one of my friends this morning. He's a vet, and he was talking about using the VA loan, right? So, and I'm curious if you know, is there would you be able to build a house and use VA benefits, or is there any sort of new construction component to VA loans, or?
Yeah, no, that is a great question. So transparency, I have not done a construction VA loan before, and so I actually haven't gone through that process. But my understanding from the conversations I have is there are banks who are qualified to do new construction for VA loans. Um, it's not something that I think the banks that I personally work with have done. So I think those options are out there for your friend if he's looking at new construction. Um, but it's one of those things I can't go super deep into because I haven't done that specific loan yet. But I think that option's out there for sure.
Yeah, no, and I appreciate the candor. I just thought I'd ask, considering
Yeah.
that's one part I really don't know either, right? About VA new construction. I wanted to obviously steer him straight, and but yeah, just thought I'd ask.
Yeah, absolutely.
No, again, thank you. Great job, laying out all the different types of loans. Maybe is there any word of advice you could give somebody? Again, maybe their first time home buyer, newly married, looking to start. Maybe they're saving a bit of money right now. Maybe you're 90% of the way there in terms of saving your cash. Are there any preliminary steps you can take, so you're ready to go for that loan in the future?
Yeah, absolutely. I mean, a huge part of my job, and I do this all the time, is people, they're not planning to buy right now, but they're planning to buy a year from now. And so what I'll do is I'll set out some goals, basically of here are the benchmarks that over the next year, you should try to hit, whether that's the amount of cash you need to save, whether that's debt, if there's any loans that you need to pay off beforehand, or if it's working on your credit, and whether that's making sure you're paying off your credit bills, all your credit cards are all on time, whatever that might be. I'm setting you up for success that way. When you are ready to purchase, you have a good credit score, and you also don't have things that are going to limit you on what you can buy. And so definitely, I would say if you're thinking about buying anytime in the next, honestly, anytime, but I would say especially anytime in the next year, call a mortgage broker, talk through what all your options are, and really develop a plan of attack between now and then that can get you into the home that you want.
Yeah, no, absolutely. And, thank you for that. And you opened the door on something interesting as well. I have to ask about interest rates, right? So
Yeah.
at least, for the past, 12 months or however many months, people have been saying, hey, we have historically low interest rates. And now things are changing. Kind of maybe someone's feeling a bit of pressure amongst that. How does someone prepare for these next 12 months?
Yeah, no, that's a great question. And, there's people have ideas of where things will go, but at the end of the day, no one has a crystal ball. For example, no one saw COVID coming. No one could, anticipate that. And so it's hard to make clear forecast of what exactly is going to happen. But I would say, generally speaking, most people would expect, for interest rates to continue to creep up through the summer. Try not to go too deep into it, but kind of one of the drivers for that, there's big correlation between inflation and interest rates. And inflation has been a huge talking point. If you open up the news, people are talking about 40-year highs of inflation. And so one of the main ways that they measure inflation is they look at how much did prices increase from this time last year. And so when you look at the charts, this time last year, inflation was picking up, but generally speaking, once you get into the summer months, they actually had cooled off a decent amount. And so whenever the readings in the summer are going to come out, it's going to show typically probably a huge, even probably higher than now, inflation reading. And so typically how rates react to those high inflation readings they're going to go up. But once you get to in October, you really see, when you look at last year's numbers, that inflation really start to pick up. And so that's going to make the gap or the comparison between last year and this year, that's going to really start to close. And so most people think that, or at least the bond expert that I follow, kind of their advice is that they'll probably increase in the summer. They might start cooling off into the fall, and then they do expect for them to start kind of cooling off next year. What I wouldn't recommend doing is, oh, rates are going to get lower next year, so let's wait. I would say, one, they could very easily continue to get higher, and that could affect what you can qualify for and also your monthly expenses. But two, whenever you say you refi or you purchase a house and your rate today is in the low fives, well, what you're doing is setting yourself up for success by you have at worst a low fives interest rate. If they go up, well, your interest rate's stuck there. If they go down, you can refi into a lower rate. And so basically you're capping what that interest rate is going to be for you, and you're taking a lot of that risk off the table, and you can always refinance it to a lower rate at a later time. And so I would say if you're sitting on the sidelines mainly because of interest rates, thinking that they'll go down in the future, my recommendation is if you can buy now, and it's the right financial decision at this time. Obviously, it's not always the right financial decision to buy. And so, it's a case by case basis, but I would say don't wait because of the interest rates. You always have the chance to refi later.
Yeah, no, absolutely. And, like anything else, one thing I really liked that you said was kind of having that discretion and that nuance, right? Like, hey, there's not a one size fits all. It could be a good idea for you to buy, or it could be a good idea for you not to, right?
Mm-hmm. Yeah, absolutely. Everybody's in a different situation. And so it's really good to talk through those and determine, is this, the right time? Because there are a lot of costs, with buying real estate. You have commissions that you pay realtors. There's closing costs. There's a lot of costs associated. And so, one thing that I recommend to people is, if you're buying a house and you don't buy a house that you plan to sell in the next 1 to 2 years, because one, there's so much market risk that can happen in that time. You don't know if value is going to go up or go down. But if you do think you're going to be in there for an extended period of time, that's going to help better odds of when you sell. It should be higher than when you bought it for. It's just good to talk through what your life plans are and make sure, you're making a decision that's going to set you up for financial success in the future. So.
Yeah, absolutely. And, it's even more reason to kind of formulate your big plan, right? Especially if you're having big life events like purchasing a home or whatever it may be.
Mm-hmm. Yeah, absolutely. Those are at least the big kind of highlights of at least that I wanted to hit on. I'll briefly touch on a few other products that are out there just so people know they're there. So for most people, they're trying to fit in, the conventional box, and that's unfortunately they can sometimes have strict guidelines of these certain boxes that you need to check, and that doesn't apply for everybody. So there are other loans out there. Some are called non-QM loans, non-qualifying mortgages. And so those are out there to help people who don't necessarily check all the boxes, but, they can be, buying a home could be a good option for them. The trade-off is that you typically have a higher rate associated with those, but just because you don't check off all the boxes doesn't mean you can't get a loan. And so there are options for you there. There are construction loans. Real quick, how they differ from a normal loan that for a house that's already built is that typically their construction period is just interest only. So that means you're not paying down the loan. Those are normally bridge loans, even though we do have one-time closed construction loans, but typically they're bridge loans that you pay interest only. There's draws as you spend money building the house. And then after the construction is complete, you refinance into a permanent loan, which is typically at a lower rate. So that's if you want to buy or you want to build a new home, that's typically the route you go. And then for people looking at investment properties, there are loans where you can do a conventional loan, but you also have the option of looking at a DSCR loan, what that stands for is a debt service coverage ratio. And so what the lender's doing is they're not looking at any of your income, any of your debts. They're not worried about that. All they're focused on is the property itself. And they're looking at the cash flow and just making sure that the income that's projected to come off that property is enough to cover your fixed debt expenses. And so that's what a DSCR loan is. Those rates are also typically a little higher than a conventional loan. And then last thing I'd probably hit on is a bridge loan. We have banks that'll do those, and basically, say you're wanting to do a fix and flip, and you're not planning to hold it long term. It's maybe going to be 12 months, 6 months, whatever it might be. Those typically will be interest only loan that doesn't last. It's due, let's just say within 18 months, where there's a balloon payment, you have to pay it off. Those can be a great solution for an investment property, and allows you a lot of flexibility that, say, a conventional loan or other loans want to have. So point being, kind of go back to this, whatever your plans are, there usually is a product that will fit that need. And so, it's good just to talk through those and find what the right option is.
Yeah, absolutely. I guess the name of the game is just, doing your research and, finding out what works for you, right?
Yeah, absolutely.
Definitely, Brandon. Well, maybe, let's see, is there anything you haven't said that you'd really just like to hammer home for us?
Let me think. I definitely covered most everything. I just, it's been, great. Thanks for having me on the show. And, it's great to get to, work with people like you. And it makes the whole process just fun. So, I just recommend, find trusted people who you can go to for advice whenever you're, whatever it is in real estate or in life. And so that's, I guess, my last thought. But yeah, thanks again for having me on, Aaron. It's fun to get to talk about everything. So
yeah, absolutely, Brandon. And I appreciate that. Thank you for the kind words. Always great to to work with people who are like yourself who are doing big things. Maybe we're in Austin, we're in Houston, another part of the country, and we're looking to get a hold of you to meet up with you, chat with you, talk about mortgages. Where can we find you?
Yeah. Easiest way, you can call me. My number's 512-814-9144. You can email me. That's Brandon Daniels at firstquestmortgage.net. And that first is 1ST as in, the number 1ST. But you can also visit my website. It's www.1stqm.com. And that will have all my contact info and tell you a little bit more about First Quest. But there's, I'm on Facebook, Instagram, LinkedIn. So if you just, Brandon Daniels, First Quest Mortgage, you should be able to find me. So.
Okay, solid, Brandon. Yeah. And, folks, we will link that in the show notes. So when you guys want to get a hold of Brandon, it'll definitely be pretty easy for you. Brandon, we've covered a lot of ground here, talking a bit about you, your background, a bit about the city of Austin, kind of the timeline and the home buying process and different options for different folks, regarding what kind of loan they want. And I've learned a heck of a lot from you. And, we appreciate you coming on the show. So thanks so much.
Yeah. Thank you, Aaron. It's been great.
Talk later.
Bye.